All right, well, I hate to say it, but I messed up. I actually was in the middle of recording and I wanted to show a trade I was in. However, I accidentally showed the account number and I was afraid I was not going to be able to cut out that piece in the video, so I'm not willing to compromise, obviously, any private information. But I will tell you what I did. I took profits at the high of this bar, made like $30. And it's not a big number. But what you have to realize, and everybody realizes it, it's not about making grand slams and home runs. It's about, or, in basketball terms, it's not about making a half-court shot. It's about making free throws and layups. Lots of $10 trades, $20 trades in a day, you can make far more than you think. And the trick is, it's not necessarily the winning trades, it is getting rid of the losing trades, which is far more important. That's where most people screw up. Most people have plenty of winners, they just don't have enough. Most people have plenty of winners, they just have too many losers. And anyways, so what I did is, I'll try this. Hopefully this will be okay. And I'll just show you. So I actually bought here. I bought one on this, basically this pullback on a 15-minute chart. I bought one contract at 97.5. I bought two more at 96.5. Got out right there. And by the way, there's just a lot of things you can do during the regular session, during the Globex. So, for anybody that hadn't traded the micros yet, they're a great way to learn how to trade. They're a great way to trade. So, and they're great for the price action we've had the past couple days. So as far as today goes, fairly disappointing day. It's actually a 15-minute chart. And a lot of times, especially for the Globex, if I'm going to trade the Globex, I'll look at a 15-minute chart. I'll look at a 15-minute chart just to get an idea of what the overall price action is in the Globex. So anyways, but I just trade a 5-minute chart. One of the dumb things I did today, I was trading the Globex this morning, and I actually ended up buying up here, which was a mistake. Surprise bar, probably getting a little bit lower. 3 consecutive bars, probably going a little bit more down. I should have just gotten out, and I ended up buying more lower, and I actually ended up getting out during this bar below here. The bar went faster down, and then I kind of thought to myself, I said, okay, this is dumb. You're selling at the bottom of a range. So actually, I ended up, as the bar started turning back up, I entered my position again and got out up here. But still, that's no excuse for buying at basically the middle and upper portion of the range. So not a great trade. And by the way, I actually looked at the Globex for quite some time today, just because I was already trading it. So it doesn't matter which one you pick. As far as today goes, open of the day right here. So big doji, actually perfect double bottom with the Emini, but it's a trading range bar. So as you know, probably sell buyers below, sellers above. Second bar, inside bar, but it's a low probability short, which means it's a high probability buy below. Then we get a big doji bar here. So ask yourself, what do you really expect today to look like? Do you really think we're getting a strong trend day? Here's a stop entry. Here's a second entry. Here's your entry bar. Close with the big tail. Follow through bar. Okay? But we have big down, big up. More importantly, what's going to happen above this high? Bad follow through. High one buy, big tail, probably sellers above. Okay? Bears are making money above bars. So, went below this bar, found buyers. New high of the day, strong bull bars, probably going a little bit higher. Three consecutive bull bars, 4-bar micro channel, actually a 5-bar micro channel. Okay, so 3 pushes up, 1, 2, 3, 1, 2, 3. Went above the high of the day for several points. But look at the rally. Does this look that strong? No, it looks strong enough for a second leg. And so far, bears are making money above bars. They sell here, scale in, make money. Sell above this high, scale in. And so far, they have not made money. We may have a little gap right here. So it's certainly possible. This is it's an open gap, so it's certainly possible. And I use gaps purple, mainly just because Al does it. But it's possible this is an opening gap, and we have a small pullback bull trend, but not likely. Bears are making a lot of money. High one buy, but disappointing. Bulls bought, scalped out. And again, bears made money selling above, scaling in. So bears are making money. If bears are making money as the rally's going up, this doesn't look like this. This is disappointing. If the bears keep making money, eventually the bulls are going to stop buying at new highs, and the bears are going to become more aggressive. You also have bears making money on stop entries. Here they made money. I think they may have made money a little bit here. So either way, triangle 1, 2, 3. Big bar, it's really a trading range market. A lot of times, this is fairly tight of a channel all the way up. So usually you have to go sideways. I think we're going to fall below this low. Maybe we'll fall below here and get back to the low of this. We may test the low of the day. I think more importantly, whenever you see a big doji on the open, you should always think trading range. I make trading range, I always mark the open of the day on the trading range and just signify it green. And the reason why they're important is it is a magnet at the end of the day. So think about it like this. If the open of the day is 95, and over here it's 98, so here's 99, here's 5 points above the open of the day. So hypothetically, if I say, okay, we're currently 5 points above the open of the day. I'll do it like this. So 2,900 all the way down to 29.5. We'll just call it, it's close enough to 5 points. If I sell 5 points above the open and put a stop up here, set a target down here, I've probably got a reasonable chance of making money. And you could say even 4 points. So here's a triangle, 1, 2, 3. If I sell below here, set a target at the open of the day, put a stop 4 points above, I'm probably going to make money. And or I've got a really high probability of not losing money. What are traders? Good example is a 15-minute chart today. Look at this bar. You're thinking, hey, the bears, they failed here, the bulls failed here, failed here, failed here, failed here. Well, what do you think is going to happen here? They're going to fail. So a lot of traders, more institutions, I think some traders, they know it's a bad place to sell. Some of them will just say, screw it. I'll sell here and I'll sell more here and put a stop way up here. And the reason they do that is, again, it's kind of like a layup. Okay, if we go down to here, I'll make a profit. If we go up to here, I can sell more. And then when we pull back, I'll make a profit. So it's a win-win situation in their eyes. Same thing here. They sell here, scale in more, get out. They sell, scale in, get out. So look what happened. Some bears will sell and just immediately take the profits. Other bears say, I'll just sell more higher. Okay, we're going higher. And because this triggered, it increases the odds that we're going to go back down here, especially when this closed like it did. Okay, high one buy, trying to go outside down, second entry short. Bears are going to sell, set a target here, betting we'll at least get there. And look what happened. As soon as we got back to that price level, we bounced. Why did we bounce? Well, it's the same concept in a channel. If you think about a channel, let me just see if I can zoom out, and I'm sure we have a channel somewhere. Okay, so here's a breakout. So spike, pullback, channel, 3 pushes up, 1, 2, 3. If you think about the logic of a channel, the whole point behind a channel is everybody thinks, okay, a breakout's the strongest piece of the market cycle. A channel is a leg in a trading range. Therefore, institutions know that if they start, when they see this, okay, bull breakout, pullback, okay, we're forming a channel. They know that if they begin to scale in higher, they're probably eventually the market's going to retrace back to these lows. Now, again, this is a very tight channel, so you got to kind of, you got to use a little common sense here. I think most traders not going to sell here. And when you get a big, strong gap up, it's basically a strong breakout. So traders wonder if maybe we'll need a new trend line break, which here, look what happened over here. So traders see this, okay, they're saying, okay, this is probably, if this wasn't the start of the channel, maybe this was and it was the start of the channel, don't get me wrong. So let's just say this was the start of the channel. Okay, traders know it's coming back down somewhere in this area. It doesn't have to fall below it. It can go a little, it can just test it like it did here. So if they sell up here, sell more higher, eventually we're going to get back down there. That's the same, and that's how trading ranges work. So I hope that makes sense. Comment if it doesn't. And more importantly, if it doesn't make sense, watch Al's videos, read his books, because he talks all about that. And, well, never mind. I won't get into that. Anyways, something I wanted to say, but I'm just not going to say it. So overall, when you look at this day, I've grown more and more accustomed to scalping. And the reason for it is it's more profitable. Most days look like this. So I would rather make a lot of $10 trades than one $50 trade and try to swing for a home run every time. Look at all these bars. You could, if you just think about all the things you could do, you could start with bar 1, okay? I could buy below this bar, make 2 points. Sell above this bar, scaling, make a few points. I could buy the close of this bar, buy more lower, scalp out for a few points. I could buy the close of this bar, scalp out for a few points. I could buy this low, scalp out. I could sell above this high, scale in, scalp out. I could buy this low, scalp out. I could wait for the follow through. I could buy this close, betting at least a little more up, scalp out. Doji, okay? I could sell as this bar is going down, scalp out. I could buy below this bar, buy more lower, scalp out. I could sell this close, scalp out. I could sell above, scalp out. I could sell here, sell more higher, and scalp out. 4 or 5 consecutive bars down, I could sell above, scalp out. We're starting to get dojis, maybe a low one short, bottom of this range, I could buy below, scalp out. I could buy above this bar, buy more lower, scalp out. I could buy this low, scalp out. I could sell above this bar, scalp out. And that's very tiring though. I could buy this close, scalp out. Here's a high one buy after an obvious buy climax. Pretty exhaustive, top of the range. I could sell here, scalp out. Surprise bar. Sell above here, scalp out. I wouldn't trade limit orders over here, but you could buy this close, scalp out. There's a ton of things you could do, but they're a lot of work. And, there's small pieces. But the trick is, that's a lot better than, let's see, buying, and I'll even be conservative, buying this close stop down here, maybe you get out here, but then you buy again here. And the problem is if you get out here and you buy it here, you're going to basically scratch. If you buy this close and you hold below here and then you get out here, you're going to lose money unless you're smart and you get out earlier. you sell here and you hold here and you get out here, you'll make a decent amount, but pretty hard to hold short through this. If you buy here, what do you do here? Second entry short, third entry short. It's hard to realistically stay short or stay long. And maybe you get out and then you re-enter, so you lost a little bit of profit there. If you buy here, maybe do you get out here? You can. First reversal is probably minor, so maybe you get out below this bar. And then what do? Not that clear. And you have to be nearly perfect if you're doing that. So it's a lot easier to do the opposite and scalp. But like I said yesterday, scalping is it's not clear. It's very discretionary and rather difficult's not the right word, but it can be tricky. And that's just because it's not clear. And usually, you're fading. So you're buying as the move's going down fast. You're selling as the move's going up quickly. So you're already in the red as soon as you enter the trade. If you do it correctly, though, you'll notice your profits are rather quick. It's kind of, everybody wants this. Everybody wants to buy the close, stop down here, hold short, and just get out here. Think about it. You make basically 20 points here's 8:40 to 10:05. So an hour and a half. You basically make 20 points. Sure. So let's try that tomorrow, okay? You buy here. Do you get out? Maybe a lot of traders may get out a few bars here knowing that it is a possible opening reversal. Let's say you don't, okay? Deep pullback, you hold long, and you get out here. So let's just say hypothetically you make another 20 points, okay? Let's say you do that on the open over here. Where do you buy? Okay, let's say you buy here, put a stop down here. So breakouts, okay? Do you get out here? Maybe. But if you did, you lost money. Did you buy here? Maybe, but it's not that clear. And then, what do you do over here? Do you sell here? Well, if you did, now it's over here. Do you buy here? It's not clear. Maybe you buy here. But then you get this bar. What do you do here? Well, it's not that clear. Maybe you hold long. And, do you hold here? And then, what do you do? Just exit at the close and you make 3-4 points. If you are perfect and held through here, maybe you buy here, but do you get out here? It's second entry short on a gap down. Some would. And if you're fast, you take profits here. Probably. Do you get out here? Probably do. Do you short here? Maybe, but bottom of a trading range, so it's not that great. And then do you get out here? You get the point. A lot of traders eventually start to discover that this is rather tiring and not so profitable. Selling here, you sell here, even though the odds favor a second leg up. Or better yet, maybe you buy here and you get out here. And then you buy here, but then you got to reverse the short here. Then you buy here, you sell here. Then you get out of shorts here, and maybe you go long there. Then you get stopped out. And I don't know if that's how I trade always. It's not that great. The better solution, you say, okay, breakout, follow through, I'll buy the close, buy more lower, scalp out. Or maybe you say, breakout, follow through, and you get out of break even, or you get out below the bar. And then you buy the close of this bar, scalp out. You say big tail, okay, 3 consecutive bear bars. You sell above here for a scalp. You buy this close for a scalp. Buy this close, scalp out. You sell below here, scalp out for a point or two. You sell above here, scalp out. You sell above, 3 consecutive bars. Maybe you don't do anything here. Do you buy here? Probably not. Probably wait for a second entry. Consecutive bull bars, maybe you buy. And you buy more lower and scalp out. That's just an easier thing to do. So I don't really have much to say with today. I guess if someone has questions, comment. Other than that, I'm gonna end this video rather short. I'll pick a random day and do always in. I still think that's what people should focus on for the most part, because I think for most people it's just not practical to tell them to scalp. I just think that's a fairly difficult thing to do in the first place. So, but let me find a day here. And we'll just go to here. Okay. So, I'll just start with the next day. Since I don't really know what the next day is, I guess it makes it a little more fair. Okay, big gap up. My first thought is it's a gap, so this is far above average price action, and I don't think we're far above. It's asking me to buy far above average, and I don't think this is above average price action. It's a doji, top of a trading range. So while I don't want to sell, certainly with the stop, I don't want to buy, making a deep pullback. Okay, consecutive bars. Is it always in short? Probably, but it's not. I don't think it's that great. I'd rather wait for another bar, and that's my reason why. You probably will have sellers above here. So a lot of traders, they may buy here and scalp out. You could probably buy above it, but you got to be prepared for a second entry. And that's my point. Traders are disappointed enough with this that a lot of bears are going to say, okay, I'll just sell. Maybe I'll sell here. Better yet, I'll sell above, and maybe I'll sell a new high betting on a trading range open. Bulls, they'll say, okay, I'll buy and I'll scalp out just before we get to a new high today. Consecutive bull bars, is it buy the close? Maybe, but it's pretty dangerous. It's always in long, but bears may have to, bulls may have to exit if we get a second entry short. Doji, so not quite enough to get out, but certainly not that impressive. So starting to rack up a lot of bull bars, trying to get a gap. It's always in long, probably going a little bit higher. You don't have to get out there, but you can. I really don't like buying this far above moving average. So bulls disappointed here. They may get disappointed here as well. And you can see a lot of bulls bought, and whether or not they scaled in, they got out of break even. So starting to get a lot of sideways price action. So, bulls are not willing to buy up here. They want to buy pullback, but always in long. 3 pushes, so it's a high 1. You can call it a high 2. Maybe 1, 2, 3. Really doesn't matter. Tight trading range. Broke below, turning up. Trying to form a gap here. So, maybe the start of a small pullback bull trend. The bulls really need consecutive strong bull bars, and then it'd be clearly always in long. So we'll see. And that's the problem. So 3 pushes up, 1, 2, 3. So it's a wedge. Always in bulls. Probably get out below. So bears probably get out below, but it's not a great short. It's a big bar, big risk, lowers the probability of the short. Smart bulls may buy below. And there you go. So dojis, bulls will buy, but they scalped out. So bears selling above. It's always in long, but it's just not great. Second entry short, I'd definitely get out of longs below. So bears trying to rack up a lot of bear bars, but really just not all that impressive. Bulls, double bottom, but 4 or 5 consecutive bear bars in a micro channel. Lots of overlap, so really low probability to be buying above stops. Better to wait. Better bull bar, but again, middle of the tight trading range, so you can buy above it, maybe stop below for a double bottom, but it's not all that great. And maybe higher probability, bulls can buy here. Kind of 3 pushes, 3 attempts up in the middle of a trading range though, so not great. And there you go. So bear breakout, close below the past several bars. So let's see what the follow through looks like. Is it always in short? I don't know yet. I think the bears need one more bar. I think it's a surprise, so I think we'll get a small second leg. But the bears really need a second bar similar to this. And they got a bull bar. So I think we'll get a second leg down. I think this could be a trap, maybe 50-50 chance. It's a wedge bottom, 50-50 chance it works, 50-50 chance you get a second leg down. So if you buy above it, I probably would not put a stop below. Really better to wait for a second entry. And so rallying up, but not getting consecutive bull bars makes me think we're going to stay within this range. Probably won't go much higher. And we're going above here. Bears want to double top. So I don't think we ever went always in short below here. Really a second leg trap, leg one, pullback, leg two. So probably still always in long. Bull's getting a lot of bull bars. However, do you really want to buy at the top of this range? What's your goal? You can buy here, put a stop down here. And this is where risk reward matters. You can buy here, put a stop down here, and you can set your target up here. Is it 60% that you're going to get here? Probably not. So getting doji, second entry short. And that's the problem. If you buy here, do you get out below here? Maybe. So we're trying to get up there, but what happened? We went above this high, turned down. So 3 pushes up. Consecutive bear bars, big enough surprise, probably going at least a little bit lower. Bottom of a range though, so not all that great place to buy. Let me blow it up a little bit. So probably strong enough for at least second leg. You can see bears sold the close, scaled in, got out of break even. And just going sideways. So bulls, maybe they, I think bears definitely get out above this bar. Bulls probably buy, but again, it's not a great buy. But it's tricky trading always in, especially on a day like today, because stop placement matters. If you buy here, 50-50 chance you get stopped out in general, and you go back up. So, it's kind of like this. If you buy here and you buy more below, you get out of break even. If you buy here, you get stopped out here, only you get a bull reversal bar, and then you rally. So here, late in the day, so strong breakout, doji probably going a little bit higher, trying to break above the range, and you can see we're trying to hold above the range going into the close. And if the bulls could close up here, it'll be a daily chart. It'll be a trend bar closing on its high. But it probably won't be. It's pretty, when you get by the close late in the day, when you get by the close at 4:30, starting before 4:30 or 14:30, which is 2:30 Pacific time or Central time, with 30 minutes left in the day, it's pretty common for price to sell off. So I'd get out the shorts below the bar because you get a very deep pullback. There you go. Always in short here. Bears, it is always in short. However, in general, 20% chance the bar one's the higher low of the day. So you got to ask yourself, do you really want to, even though the bar's big, okay, so the bar's bigger, so it increases the probability, but to what? What's the probability this is the high today? Is it 40%? No. Is it 30%? Yeah, probably. Do you really want to sell if it's a 30% chance that this is the high today? Here's the problem with trading. Everybody wants to do this because it's the easiest thing to do. I would 100 times rather sell this close, put a stop up here, set a target here, and make 10 points or 5 points. It'd be easy. Instead of dealing with scaling in, just trade a full size position, sell here, get out here. Simple, piece of cake. I'd rather you get a bear breakout down to here, bear bar follow through, set a target down here, and then make a lot. But that doesn't happen. That's not reality. So 2 consecutive bear bars, but so are we going lower? 70% chance we'll get a second leg. Maybe 60% chance we'll get this. I don't think so, because we had the 60-minute moving average here and big tail. Big tail means bears bought into the close. Why do they buy into the close if we're going to get a measured move down? That makes me suspicious. Okay, this is getting better for the bulls, or excuse me, better for the bears. So probably going lower. But again, why the deep pullback? And then look. So what happened here? I thought we were going lower. Well, what I say right here, it's everybody wants, and here, and by the way, watch what happens up here and here. So what happened right here? Well, if I sell this close and sell more at the high of this bar, what's happening right here? 50%. I could sell here, sell more. I could sell one contract here, get out of break even. Other bulls say, this is great. Probably not going to be a bear trend, but gee, this doesn't, if it's a trading range, I'm buying at the top. Oh, okay, I'll set a limit order and buy 50% pullbacks. And I get filled. So again, my whole point is usually most breakouts there's something wrong with them. You get a breakout that it's a big breakout, but it's at support. So you don't know if it's a sell vacuum, which in this case it was a sell vacuum. And you got a small second leg. Let me see here. These bars are different. When you get a bar this big, it's so big that it's just going to have influence on the day. But you often get a 50% pullback or close to it. So if you're buying, stop goes down here. But they're great trades for a few reasons. Realistically, a trader can, for the most part, sometimes this is a second leg trap, but however, this lowers the probability because the bar is so big. So you can often just buy the close, but better yet, if you wait for follow through, most of the time you can buy lower, and even if you get another bar up here, you have higher probability. So you can often, and look what happened here. Bulls buy, put a stop down here, set a target right here. And this goes back to my whole initial and actual risk reward. It's important, it matters for a couple reasons. I'll give you a few scenarios. Okay, there's one. There's two. Sure, I get. So there's somebody that's making the case that initial and actual risk really don't matter because it's so subjective. Sure, I get his point. His point is you don't need to see this measured move up to know to take profits. And is that true? Technically, yes. You can say strong bull bar, bad follow through, probably leg in a trading range, disappointing tails, probably going a little bit higher, strong breakout, maybe consecutive tops, 1, 2, 3, so a wedge, bull break out of a wedge, maybe we'll get another wedge, 1, 2, 3, broke above the high of this range, probably going sideways. Strong bear bars, strong enough to probably make the market a trading range and just get out break even over here, somewhere in this tight trading range with the profit from buying this close. Of course, you don't have to say, okay, strong measure move, I have to take profits up here. No, of course not. You can look at this and say, okay, strong breakout, odds favor second leg. Fairly weak pullback, and now we have another strong breakout. Okay, so the bulls are still strong. I'll hold. Probably legging, this is probably minor, too tight of a channel. Rally, okay. Now we're starting to go sideways for 20 bars. So, the bears may be getting strong. We have kind of a surprise bear bar. So this may be a trap. Maybe we'll get a second leg down. But some surprise bars, price will go above the bar before it turns down. So, hope that makes sense. If it doesn't make sense, comment. Sure, you can say, wow, we have 3 consecutive bear bars, probably get a measured move. And we did get a measured move. No surprise. However, when you get a big gap down and consecutive bear bars, most of the time you go sideways, so you've got really a better shot at getting out and selling higher. So I hope this makes sense. Comment if you have any questions. Thanks for watching.